Taiwanese index, however, is up 0.7% as we speak.
Forward-looking inflation indicators are telling us that. The most important is property in the United States. Price of goods isn't the issue anymore.
Brokerages are worried given the fact that, Bandhan underestimated the EB stressful
0.7% or 125-130 point jump on the Nifty.
Markets continuously have been very resilient compared to what's happening in the global market.
Revenues have gone up, EBITDA has gone up, PAT has gone up.
The report that has to go to government, that report has to go within 1 month of when the inflation target is deemed to fail.
Realizations were higher because they have gone ahead and taken some price hikes, and that is something which impacted or made their margins better as well.
For our own markets, after getting that gap up, we've only sustained at those higher levels.
CPI data point, which should come out just after the midterm elections, has a better base effect.
Target is to end the rescue operations by the end of the evening.
Up around close to 200 odd points for the Nifty.
Hello and welcome to Closing Bell. That was the day so far. I'm Nigel D'Souza and joining me is Manglam Malu. Hey Manglam, what a day of trade it is, right? Monday morning, you start off well in the green and you hold on to those gains. Right. So I would read that rather positively. The good point, Manglam, is the bulls, they've broken their jinx because the last few days, we open gap up and from there we just see, a bit of a downtake. And all through this session, we do nothing till it's around 3 p.m. odd. Today, we're trading at the upper end of the band. So I like that. The HDFC group, well, they are in top form. HDFC, which is not part of the Nifty Bank, HDFC Bank, which is part of the Nifty Bank, though the Nifty Bank is underperforming, the largest constituent in there is doing pretty well. And HDFC Life as well, all of them are doing pretty well. And it's good news when the HDFC group does well. The tide may not lift all boats, though, in the banking space. And that's the sense you're getting, as is evident with the reaction you're seeing on Bandhan Bank. Everyone's talking about growth, credit costs coming down. That isn't the case. In fact, Bandhan Bank, the credit costs, they've revised upwards. The growth they're sticking to, but NIM still, the street is a little bit sticky out there. And that's why you're seeing the outsized reaction on Bandhan Bank. And domestic-facing themes like cement, well, they continue to do well. Ultratech Cement is up and about in trade today. And most of the cement counters are doing well. Maybe post-festive season, post-monsoon, expecting demand to come back as well. Manglam, I'm looking at the options data very closely. And call writers, they were banking on the 17,850, 17,900 level holding out. The 17,800 call actually has seen a lot of unwinding today. Then there is fresh writing being seen at around the 17,900 put as well as the 18,000 put. So it gives us a sense that the bulls want to go home today with good gains. Let's see whether or not that happens. We got close to around 60 minutes of trade left. And then I guess, Manglam, battle it out for a couple of days and hope the Fed delivers. That is the dovish, fine print or dovish commentary that the street is waiting for comes about. And then we start making our way to the fresh all-time highs. That's the way I'm reading it.
That's correct. Nigel, the way the short covering has been taking place in the 17,800 call. The important part, however, is that not only have we broken past the jinx, we've sustained above that. The third, straight session after we've, taken a bit of a resistance out there. We come back and we do better than that. And throughout today's trading session, there weren't any dips. The important part, however, is that while that was a resistance on the way up, does that become an important support on the way down? That is something we'll be monitoring, because if that happens, then the support has, in a span of 20 days, moved higher from 16,700, 16,800 to all the way up to 17,700 and 17,800. And where does the market go from here? If the mid-cap index is something to look at, then that's telling you that maybe the street believes this is likely to sustain. Because up until now, the Nifty was doing well. It was the mid-cap index which was underperforming. In today's trading session as well, for most part of the session, the mid-cap index was either in step with the Nifty or perhaps mildly underperforming the frontline index. But now, as we speak, with the Nifty sustaining around 17,972, we have the mid-cap index at an index level which has gone up and is outperforming the frontline index. You spoke about a lot of the cement stocks as the post-festive season. Maybe the street believes that there could be demand for cement, etc. I'm looking at a couple of these stocks which are perhaps doing well on account of demand in the festive season itself, and that's urban consumption. You look at Trent, up 5% in today's trading session. AB Fashion and Retail, that's telling you that maybe these guys had a good festive season. But all that and more, we'll just watch out for in the next 60 odd minutes. Let's tell you what's lined up on the show today. It's a good day of of trade with all key indices maintaining a firm stance in the green. The Nifty within kissing distance of that 18,000 mark. We have autos and IT stocks leading the charge.
Nifty majors, Tata Steel and L&T, they're all set to report their second quarter numbers post-markets today. We'll tell you what to expect later on the show.
What's aiding the surge in Nykaa today? Key triggers and the road ahead for the company coming up in just a bit.
Pashupati Advani of Global Foray will be joining us to decode the market moves and the road ahead for equities, as well as how's he reading the macro picture. Well, how do you position yourself in the final hour of trade? Let's get in Mitesh Thakkar to tell us exactly that. Hi Mitesh, good afternoon. Well, a good session, right? Last few days at around 2:30 p.m. when we touch base, the Nifty is normally off the day's high. Today we're trading at the upper end of the band, and I would read that positively. What's your view on a closing basis? Where would you like the Nifty to close to maintain that positive bias? And where would your stop loss come in at now, Mitesh?
Yeah. So, Nigel, I think, the good thing is that we had a gap up opening and then there was no supply pressure. So the open is as good as the low for the day, just 0.2% kind of, 0.2 points kind of a difference. So I think we've had an uptrending day. Now, the other thing is that if you look at all the weekly tops for the last 1.5 years, actually about a year and 2 months, I think, we have had the trend line joining all the tops coming in around this 18,070, 18,100 mark. So I think if not today, in the next few days, I would definitely welcome a close above 18,100. I think that should confirm that, we will possibly make a very serious and a strong attempt to test the all-time highs, get towards 18,500, 600 zones, and then maybe beyond that. But otherwise, I think, the gap up today, if that is not filled, then I think till then, I think, we'll maintain a positive bias, which means that Friday's high of 17,838, 840 becomes your trailing stop loss for any kind of positional trades. Till that is taken off, trade with long bias. The calls that I have right now are buy on Larsen and Toubro with a stop at about 1995 for targets of 2100. And the other one is Ultratech Cement. That's a buy as well with a stop below 6650 for targets around 6900.
Right. Mitesh, just wanted to, your view on the way large weights on the index are handing the baton to each other while keeping the index afloat. This morning we had Reliance, which was doing extremely well for most part of the day. We had L&T as well pitching in, but now it's the last hour of trade. Both those have moved off highs, and we have HDFC Bank and HDFC Limited doing well. So there has been a swift, smooth passing of the baton between Nifty leaders. How do you view that chartically? Mitesh?
See, I think, this rotation will keep on coming. My sense is that I think, as markets move up, we saw the initial part of the rally was led by the Bank Nifty. And then we saw a high of around 41,530 on the Bank Nifty. Today, I think, after 3 days, we are slightly below that while the Nifty has actually moved up. And it is on a 15-day kind of a high. So I think this rotation will keep on happening. We had some participation happening from the Nifty IT in between. And then, that's kind of, compensating for the underperformance of the bank. So I think that's not a worry. That's in fact a very positive thing that the rally is slightly widespread. Of course, on a 7-day basis, something will outperform, something will underperform. But I think to me, it's a very positive sign. And I think, that is actually preparing me for that breakout beyond 18,100, which should at least retest, make us retest the earlier highs of 18,672 on the intraday basis, but 18,550, 560 on the closing basis.
All right, take that point. We'll keep coming back to you through the course of the show. Let's welcome Deepak Shenoy, who's the founder of Capital Mind, joining us now. Thanks a lot, Deepak, for joining in. Season's greetings to you as well. Don't think we spoke during Diwali, but we were talking about some of these index large caps doing extremely well. Reliance is one of them. You've liked this in the past, and it's outperformed over the last few trading sessions. Your thoughts on the stock from here?
Hi, and firstly, thanks so much, and wish you all a very happy Diwali as well. So I think Reliance, we've been bullish on it for a long time. The idea here has been the concept of the demerged entity between Reliance Jio, the telecom, subsidiary in a way, and the retail subsidiary and the oil and chemical business. Plus, they have a bunch of others as well. So there is, if you demerge them all, if you take them all individually, I think they will be valued more than Reliance is currently at the top. So that was the the original thesis, and still continues to remain, because when one business is weak, the others seem to be able to pitch in. Interestingly, right now, they've demerged a financial services company. And I think that makes sense, because once you create a financial services entity inside of a large operating entity like this, then all your debt equity ratios can get skewed because effectively raw material for a financial company is debt. And then your debt equity ratios at a consolidated level get complicated if you're growing financial services separately. So that's a good development, but I'm still waiting for the larger demerger here. And I think Reliance is very, very interestingly positioned, given where it is right now and given how much more focus India is taking towards building, less of a dependence on crude oil going forward, improving the domestic economy, promoting domestic players rather than imports to help fuel India's consumption economy. I think they've kind of shifted gears from being a traditional B2B kind of player in the oil and gas space to a player that's more B2C now. And that's what's, I think, driving a lot of the transformation. Lots of other issues, of course. There is, what's going to happen at the top, and a lot of the other things are still unknown, and that's why I think the price is also relatively low compared to what it should be. So I'm still very bullish on it. As a disclosure, we own it. It's one of our largest positions.
All right, hi Deepak. Deepak, I wanted to ask you. You briefly spoke about that very small part of their business that they've demerged, the financial services business. I'm just looking at Bajaj Finance. In this month itself, the stock is a little bit lower, while the Nifty is up close to around 4% or thereabouts month to date. Do you think that it's playing on the minds of some investors that suddenly you'll have another listed entity? It's very, very small in the scheme of things, but I mean, this Bajaj Finance as trades at around 8 times price to book and the likes, always been elevated. Any view on this, or do you think it's too soon to call?
So it's interesting because the book value of this Jio Financial Services Limited will have actually 6% of Reliance shares, which were treasury shares earlier, which will be demerged and put into this entity. 6% of Reliance is 1 lakh crores. So if you look at that, that's the book value of this new entity. If it is considered as part of book value, it is a 1 lakh crore book right from the beginning. Of course, they don't have any lending yet, so not any meaningful amount of lending yet. So, but they get a huge view to expand their lending without having to raise capital, which may change the way people look at the economics going forward. But I think Bajaj Finance is a fantastic franchise, and I don't think we should compare, right now, something coming from the Reliance table, which has not really gone into the financing scene of things in any major way till now, to a well-established, flywheel like Bajaj Finance, which would obviously have a huge amount of, penetration, distribution, presence, way beyond what anything else, way beyond what Reliance has. However, Reliance does have captive models here. So I would hesitate to make a comparison. You should price, something like Reliance, the Jio Financial Services at 8 times book or not. But even at 1 time book, if the book value actually contains the Reliance shares that they hold, that would still be a 1 lakh crore kind of market cap, which is quite significant. So I don't know. I don't think Bajaj Finance is facing that heat. Bajaj Finance's commentary was actually a little bit negative, and honestly, we have some of that as well. So I would say, own both in the longer term.
Okay, fair take, Deepak, then. But let's talk about these new age companies, right? Because in the month of November, there could be some supply. No, sorry, not some. There could be a lot of potential supply that hits the markets, and Nykaa would be one of the stocks that will be in focus. So, Mangalam, you tell us first, how are things stacking up? Nykaa has got smacked in the last few days. Today, it's up close to 10%. They've postponed that bonus, right? The effective date out there. But tell us more.
Well, that is the reason why the stock is higher today, is what my understanding is, and that's primarily because they've gone ahead and moved the record date for the bonus from earlier November 3, which was day after tomorrow, to November 11th. It's a 1:5 bonus that the company had announced, so that is something that we know already. What is it that happens once this is postponed? Well, around the bonus, when every time a company issues the bonus, there is the factor of bonus stripping, which after the X date, a lot of people go ahead, the ones who had bought it for the bonus will go ahead and sell. So that would have been increased supply for the stock, and over and above the supply that was expected already on November 8th and 9th as the lock-in for pre-IPO shares open. So with this bonus being postponed to, record date being postponed to November 11th, at least that bit of supply overhang is taken care of. And secondly, they have their second quarter numbers as well tomorrow. But importantly, it could also be a case of just bottom fishing, primarily because, second quarter aside, the third quarter numbers are likely to be good. There will be festive season, festive buying, etc. So this month, the stock is down 19%. This year is down 51%. From its highs, it's down 60%. So after this sort of correction, are some investors taking a bet on the company going forward? The ones who perhaps did not get it at IPO and are now looking at it with a price which is sub the IPO, and in that interim, the company's earnings have grown. I mean, it's a profit-making company, right?
Yes.
So maybe if that's the call that they're taking, and over and above that, there is the worry of additional supply taken away by about 7 or 8 days.
Okay, all right, Mangalam, fair analysis on that one. Deepak, coming across to you, what's your take? If you like something at a far higher price and it could be a potentially, better place in comparison to some of its peers, at least that's what the market believes. Now, if you want supply, you could potentially get plenty of supply. Will you be spoiled for choice, or do you believe that you'd rather look at other opportunities than looking at Nykaa at around 1,050 to around 1,100?
So, I kind of talked about it. I think the supply issues, the supply overhang on Nykaa continues because they have a bunch of venture capital companies as investors. Some of these companies are mandated to return exit proceeds to their client, and exits are defined as IPOs. So they were locked in for a year since last November. So when the exit window comes in, they will probably want to make deals to kind of sell these shares. Some of these deals may have already been made because that may have been the reason why the price fell last year, because there were people who have made those deals saying, I will sell it on that date, and they sold it in advance, or however the structure goes. That might have been the reason why, and I believe at least that's the reason why the stock fell in the nearly this last month or so. But one quick note here is that the bonus stripping thing may not apply anymore, because in this last budget, the finance minister changed the rules of bonus stripping on stocks to say that if you buy and sell within 9 months of the record date, I mean, this could be the window needs to be 9 months, then the bonus stripping losses are cancelled. So now if anybody buys for bonus, they have to hold it for another 9 months before they sell and take advantage of the, effectively the bonus stripping, which negates the possibility for most people to actually do bonus stripping, at least in Nykaa, because people do it for the same financial year. They don't wait for the losses to be booked in the next financial year. So I don't think that's the case. But yeah, I mean, Nykaa, I think, is an interesting play. I would wait for the supply overhang and all of these issues to get sorted, wait for the results, let them show there were some operational performance issues also last time. I think let's see if this festive season has been much better for them.
So what, in your understanding or experience in the stock markets for so many years, makes you believe that the company would have perhaps postponed the record date? I mean, could it be procedural, or I don't remember this happening in the recent past, at least.
Yeah, it's strange. I mean, there are hundreds of reasons why, sometimes it's sometimes as innocuous a reason as somebody forgot to inform somebody else, and then they're like, oh, it's too late, and it could be just that. So speculating on it, I don't know what the reason is, but I don't think it's sinister.
Right.
I don't think it is because moving from 3rd to 11th is almost like saying, I give you food tomorrow instead of today. It doesn't,
But between today and tomorrow, there would be a lot of events, right? What if you have to run a marathon between tomorrow and today? And that is what we're talking about, because between the 3rd and the 11th, there would be that anchor lock-in which would open. But be that as it may, we will continue to, speculate on this. And after they've reported their numbers, we'll perhaps ask the same question to the management as well for some more clarity. But hang in there. We have some news coming for you from the insurance space, because sources tell CNBC-TV18 that the insurance regulator has asked the SEBI to investigate violations around the fair market value, and this is with regards to the Axis Bank Max Life transaction. Yash Jain joins in with all the details. Yash, what does this mean? Who is this positive for?
So, Mangalam, so far it was only the insurance regulator that was actually investigating the Axis Bank Max Life transaction. There were penalties which were also imposed on the two companies. But it seems like market regulator may soon essentially start examining this transaction. That's because what we've been given to understand from our sources is that the insurance regulator has written to the market regulator, that is the SEBI, to look into this particular transaction, that is Axis Bank and Max Life. And what is that particular thing which SEBI has been asked to look into is the concept of fair market value when it comes to the transaction which happened in Max Life Insurance, under which Axis Bank bought about 13% stake. They are yet to acquire another 7% stake in the company. Essentially, what IRDAI has asked is that since there is so much discrepancy in the price per share in the last 10 transactions in Max Life, why is it that in just 15 days, the price per share of the company fell from 166 rupees a share to 32 rupees a share, the shares which are allotted to Axis Bank? What has been asked from SEBI is the nature of this discrepancy in valuation, and how did it really benefit, and what was the exact nature of benefit to whichever of the parties if it benefited that particular drop in valuation. We've written to both regulators, that is the insurance regulator, IRDAI and SEBI, but we are yet to receive a reply from either of them.
We take that point, Yash. Thanks a lot for that. Meanwhile, just keep an eye out at the bottom of your screen, the flashes. There are some lines coming in from the conference call of BEL. They've increased the lower end of their margin guided band. In fact, from 21 to 23%, they're more confident that they'll probably be anywhere between 22 to 23% as well. They are set to achieve 15% revenue growth in FY23. And that implies that the second half will be better than the first half of this year. They've also received almost $1 billion worth orders coming in, or letter of intent coming in for a battery pack. Deepak, your thoughts on a couple of these PSUs, defense PSUs, rail PSUs? BEL has been a big mover this year, up almost, what, 52 odd percent?
Yes, we own a bunch of them, so quite biased there. But the thing about BEL, I mean, it's done its it is a cyclical thing a little bit here, but the stocks go up typically, and then they crash. They really badly crash. And then come back, and so on. So right now it's on a good uptrend. It's a momentum kind of a story here. But what's also happening is, of course, India is moving towards defense indigenization, which means that more and more orders are going domestic rather than getting imports. This is quite a dramatic change now from both the Ministry of Defense and overall. I think the country's administration has moved to saying, listen, we need local manufacturing of our defense products, both I guess from a cost perspective, because the dollar can change the cost quite dramatically, the exchange rate, if you import stuff. And second, from a security perspective, because if the country that you're getting your goods from decides for whatever reason that you should not be given some spare parts, then you can't run your aircraft and you can't run your, so this is a problem I think we are seeing as a potential situation that's been happening, let's say, either in Russia or in China. And we don't want to be in that position. So indigenization is what's causing perhaps a lot of these things to rise. BEL is the largest among all of them. So I think it's just taking the leadership role here. But a lot of good defense companies, both public and private, seem to be moving up tremendously, because the opportunity is 10x what it is right now.
Okay, all right. Deepak, request you to stay on with us with news that the markets are holding with solid gains of around 190 points odd. The Nifty Bank has been an underperformer, but that's getting its act together as well, up close around 300 points. Slip in a short break. We come back, we'll discuss a few more stocks with Deepak, and we'll also get in Mr. Pashupati Advani of Global Foray. He'll talk about markets, sectors he likes and dislikes as well.
My journey of insurance and investments began at the same time, when I invested in LIC SEEP. In this fast-moving world, SEEP can balance your funds with security and growth. SEEP will take care of the ups and downs of the market and will give you fruitful results, so that you enjoy the ride! And when SEEP is with you, You can soar high!
LIC's unit-linked insurance plan SEEP offers savings and protection so that you can soar high in your life. LIC, हर पल आपके साथ.
Thank you, Amit ji.
जुग जुग जियो, जुग जुग जियो, खुश रहो, खुश रहो.
Thank you so much.
ओके ओके ओके. शादी भले ही वर्चुअल हो, थैंक गॉड, मिठाई रियल है. बीका जी रसगुल्ला. अब बजेगा ढोल.
अमित जी.
हाँ जी.
पी.
शनाई. बीका जी गुलाब जामुन.
पर आपने तो मिठाई खाना छोड़ दिया ना?
हाँ यार, पर ये तो बीका जी है ना.
Amit ji loves Bikaji, loves Bikaji.
DCX Systems Limited, among the leading Indian manufacturers of electronic subsystems and cable harnesses in the defense and aerospace sector, now makes an initial public offering of equity shares. The 100% book build offer being offered in a price band of 197 to 207 rupees per equity share. Opens October 31st and closes November 2nd, 2022. For risk factors and other details, refer to the red herring prospectus.
Welcome back. Well, good going on the Nifty, and Tata Steel has recovered from the low point of the day. So let's focus on that counter because it's going to keep me busy later today, and tomorrow morning we'll have a reaction on that one. It comes out with a set of numbers, consolidated numbers. First, revenues will be lower, operating profit will be smacked 60%, and profitability will be all over the place. Now that's where all the numbers that are not important in the end, because for Tata Steel, you're looking at the India business and the European business separately. So let's run you through some of the expectations then. For the consolidated business, steel prices will be lower, could correct by closer to 13 to 15% sequentially, 13,000 approximately. Contract prices are lower, export prices are lower as well. And even in Europe, there could be pressure of closer around $180 to $200 per ton. Input costs as well have cooled off, but that will come with a lag. So for the past quarter, steel prices will be lower and raw material costs will continue to remain elevated, not correct as much as steel prices. However, some part of benefit they'll get because they've produced more in India. Remember, the first quarter is a bit of a washout, so there'll be some growth on the volume aspect. So let's run you through both the individual segments then. Tata Steel India, out there you'll expect a growth of closer on 4% in terms of volume. Sequentially, it'll be up closer on 18%. The past quarter got hit because that export duty was levied. EBITDA per ton, though, it will come in at its lowest that we've seen in multiple quarters, should come in at around 11,000 rupees odd. There will be some kind of cost savings, better operating leverage, but that will be insufficient to overcome the lower realizations. Tata Steel Europe next up. Sale volumes will be lower by close to 12% sequentially as well as on a year-on-year basis. EBITDA per ton that I'm working with is around $110 on a per ton basis. Negative operating leverage, sharp drop in pricing as well as higher input cost, all of that will hurt. Besides its numbers, the management commentary on demand, pricing, what's happening in the UK, will they shut down the business or is the UK government going to support them, and deleveraging plans as well. That's something that we'll be tracking. At around 6:30, we'll have a media call which will play out for you all tomorrow, and we'll come back with an analysis on the numbers as well. Deepak, what's your take? Tata Steel at around 100 rupees odd, adjusted for the corporate action. The steel cycle is in a bit of a tizzy. The good news, though, is that balance sheets of all these ferrous names are in much better shape than we have seen in the last 10 years or so. Your take?
Yeah, so I think you're right. I mean, there's no reason why you should think these companies will go bankrupt, but their pricing also tends to vary. You end up with having 2 times price to earnings, 3 times price to earnings at one part of the cycle, and then 20 times on the other part. I think we're heading towards the point where earnings start to decline, margins start to decline quite dramatically, and world demand and domestic demand as a consequence will also decline quite dramatically over the next 1 year, 1.5 years. So I think we've seen the top of the cycle. I think I've been talking about it since I think Jan or Feb this year that we're not interested in steel. Although some companies may have done well in this year, I think this cycle will take another year, 1.5 years to kind of bottom out. And it's the next cycle that will probably give you the chances for another fresh round of investments. And usually in cyclicals, you'll invest when the PE is relatively high because the earnings will be depressed, and exit when the PEs are relatively low. So it's just the way this cycle is played. I would say, not interested at the moment. I'm not tracking the current results, but I expect at least the world steel prices to remain depressed because all the central banks want to cause recessions. I don't want to fight that kind of a mega trend here.
Take that point. You don't want to fight that, but just as we move towards closer towards their earnings, Tata Steel has moved mildly into the green as we speak. But just keep an eye out on the currency space. The rupee is selling off. In fact, as we speak, it's at the low point of trade. It's 82.71. The previous close that we had today was close around that 82.47 odd. So it's been a big surge. It perhaps could have been because it's the last day of the month, maybe some sort of dollar buying by oil marketing companies or people who have to make payments in dollars, etc. But this is something we'll have to monitor, primarily because I remember this happening, Nigel, 2 weeks ago as well, where there was this big dramatic slide that we had seen on the rupee itself. And then as a result of which, there was some weakness in the equity markets. Today, so far, nothing has happened on the equity market. In fact, the Nifty has only gained from strength to strength. It's up 200 points, so it's a double century on the Nifty. But this is something we have to monitor. In fact, why just the rupee? We've also seen a wee bit of strength on the dollar index. This morning, it was around 110. Now it's moved to around 111. All of this comes at a time when we have the FOMC meet outcome just 2 days from now. So that is something we'll have to watch out for. The dollar index this morning was 110, now 111, as a result of which we are seeing some weakness in the rupee and incremental weakness coming by in just the last few minutes, currently at the low point of today's trading session as against the dollar, which is at the high point, 82.71 on the rupee. This is something that we will keep tracking. But as we do that, let's also talk about a couple of stocks which are ranking in trade today. Bandhan Bank and Intellect Design Arena, both of them are lower and how on the back of weak second quarter earnings. Incidentally, we had a word with the management of both these companies, and this is what they had to say about the business going forward.
A normal sum of this, the slippage will come. It is now coming on that the 500 to 800 crores has come to this the quarter basis on that. So when the second and third quarter will come, which the business growth level is coming very high, there is an first the point of that the NIM are always we are looking on that the 7.5 to 8% is our targeted, and will be like to reach.
If you are looking for the margin, there are two reasons. We move from our product business to a platform business, which is resulting into a not immediate booking, but we booked 4 orders and those orders translate into $2.9 million. And there are $3.1 million which has got shifted where we won the order, but contracting is not completed before 30th September. So if you put that in context, I think we are in the same number, around 125 crores of EBITDA would have been there. Just 20% plus on EBITDA margins, that's what we are saying.
Okay. All right. Before we move on, let's thank Deepak Shenoy. Thanks, Deepak, for joining in. We discuss a whole host of stocks and we enjoy your candid, remarks on all of them as well. Well, let's get in Mr. Pashupati Advani then of Global Foray, who joins us. Hi, Mr. Advani. Good afternoon. Thanks so much for joining in. Season's greetings. We haven't chatted in a while, so I hope Diwali was good and the New Year is going to be an absolute cracker. What's your view on the markets, Mr. Advani? The good sentiment is back. People are talking about positivity. Sensex back at 60,000, screaming out for fresh all-time highs on the Nifty. Are you in the camp or are we getting too exuberant?
Well, I am sort of cautiously optimistic. I don't think the market is going to crash out and go down, but I think that maybe we are slightly ahead of ourselves because there are some structural problems overseas which I do not believe that we can get out of. So it's nice to cross 60,000. It's a double century day for the Nifty, and the bank indices are also doing okay. But this can't go on forever. But I will say that the American stock market got hit, and now it's coming back with a passion. So maybe we are following, but let's see what happens. We've got a whole bunch of things happening with the FOMC meeting. We've got the US elections coming up, the midterm elections coming up on November 8th. So there's lots of foreign news, which I think we are not going to be able to insulate ourselves from.
But Mr. Advani, if you had to have a say in the next year, by next Samvad, would you think that we would be 10% higher at least, double-digit returns on the headline index?
Well, I would hope so, bearing in mind that India is the slice of the flavor of the year again, and people are looking to India to to manufacture and to shift some of their buying to. But as I said, what I'm seeing, just to say in America, I'm seeing like housing prices are coming down. We haven't heard of that here. Real estate still seems to be doing well. But if it's happening in the US after a long time, simply because mortgage rates have gone up, there's no reason why those same models won't get transferred here, because there's a lot of investors that look at how things behave in the US and try to mimic it over here. So in America, private equity is drying up. Maybe it'll dry up here. We still have some people who have powder, but there is a lag. Now, how long that lag is, whether it's 3 months or 6 months or maybe even a year, we'll get away with. In which case, our markets will be great.
Markets will be great. Whether we don't know whether it'll be great a year from now or not, but currently it is great because you've come as a good luck charm. Just as we speak, the Nifty has hit that 18,000 mark on the frontline index. 214 points higher as we speak. We were expecting a 3 p.m. move. A 3 p.m. move has come, and it's come at on the way up. For most part of today's trading session, the Nifty was holding on to the gap up that we got overnight, and now as we speak, Mount 18,000 is here, just about 30.35 points here or there. But for all practical purposes, we are at 18,000. Will be interesting to see whether this sustains or not. And could there be a last 30-minute flourish on the way up by some of these call writers or not? But that's about the near term. But, Mr. Advani, back home, someone is either bullish on IT or financials. Financials seems to be a bit of a consensus trade now. But I'm looking at your views and you don't like either financials or IT. What explains that, and what do you like instead?
Well, as I said, I'm just looking at America and saying, there are enough investors out there that look at what's happening in America and try to put the trend here. So you've got rates that are going up. Okay, with rates going up, first of all, you will have pressure on people to pay. We don't have as much of a problem because most of our loans are fixed rate. Versus in America, a lot of the loans are floating rate. So when the Fed increases by 0.75, their rates go up. So that is beginning to hurt in the US. The IT sector in the US, which is FANGs, are beginning to lay off people because they're not getting the revenues. People are advertising less. Now, I'm not saying that our IT in India is equal to FANGs, but because it's the same kind of broad sector, I think that there's going to be pressure on IT stocks. Their business model is changing. In America, people are replacing those Indian Infosys, TCS, Wipro jobs with locals because there are locals now looking for work. And they're also trying to not import as much. So those pressures are there. And I think that, I am a contrarian in that case. And I've actually been smacked in the face as a result of it because I'm actually a contrarian on financials as well as on IT. And the rest of the market seems to be against me. So it's like I'm getting carried out for being this way.
Okay, all right. Mr. Advani, the other interesting one out there is you like steel. That's a bit of a minority camp, actually. I think around 12 to 18 months ago, everyone used to call me up and educate me and tell me why they like steel and the various reasons. And this time it's going to be different. Steel prices have come off considerably, and today in China as well, prices are under some pressure. But my guess is that maybe you're betting on things bottoming out, and that's why you like steel?
See, the steel folks have had a great year, and they've really made a lot of money. So hopefully they're able to be invested and take care of all their debts and things like that. And that certainly we've seen that in the prices. See, my thing is we're going back to core business. There's real estate to be. I'm assuming that the spending is going to come majorly driven by the government. Real estate projects have to be finished. They're not all government projects, but there is RERA in every state pushing to complete them. There's also a lot of road building going on, which is requiring steel, and port building and other infrastructure. So you are seeing some of that. So I just feel that the demand is there. Government had put a restriction on exports. That I believe is also getting softened. So that will also help the companies at least be able to move the material. And you mentioned China, but do we really know what's going on in China? I mean, they're breaking buildings the last time I saw. They're cracking thousands and thousands of square feet of real estate because they have no use for it. So they'll crash them and build them again. So I don't know what the hell is going on in China, and it's an enigma for most people, including us. So I just feel that there is a basic need for steel in India. We're definitely not going to import any, and we have domestic quantity, and all the big players are able to fulfill. So why not? And likewise, cement. I mean, these are the people that, are required for actual infrastructure growth. Nigel?
Right, we take that point, Mr. Advani. As we speak, just keep an eye out on a couple of stocks. However, Supreme Industries is the one which is up 6% as we speak. Reported their numbers today. We had a conversation with the management as well. They're confident of 9,000 crore worth sales with margins between 12.5 odd %. But importantly, they believe that PVC resin prices have now bottomed out. You also like the specialty chemical space. What in particular do you like in that, Mr. Advani? I mean, I know you're not at liberty to take names, yeah, but some segments, if you could give us a sense.
See, there are inquiries coming in from companies outside, not for APIs, but for pre-API chemicals. So those are the chemical companies which are doing very well. And then anything that's in industrial chemicals is also doing well. Another sector that I mentioned that I haven't mentioned, but I'm also quite comfortable with is the logistics sector, because I think that our roads are getting better, our infrastructure is getting better, and now things are going to move, and there'll be some efficiencies there. So I expect the large logistics players to do well. So, what I'm saying is that you've got these companies that have the chemicals that the world wants, and those are the ones that, if they export and even locally, they are the sort of the icing on the cake, and those are the ones
on logistics. When you say that you're positive on logistics, is it the large rail logistics that you're talking about, road logistics, or maybe some of these express e-com plays that we've had, which are recent listings? Because we've seen a sharp dip in names like Delivery. We had numbers coming in from Transport Corp as well as Blue Dart over the weekend. Both of them showed some weakness in the margins with some positive triggers going forward as well. So Delivery is at the low point. We have Transport Corp at the low point. We spoke with the management, and we also have Blue Dart, which is currently sitting at a cut with a cut of almost 5 odd %. Could you be a little more specific in what kind of logistics do you like?
So the last mile delivery space, according to me, is very overcrowded, and there's a huge unorganized sector over there. Okay, and in that you can talk about delivery, but you can also talk about Zomato and things like that, which are doing food deliveries. It just does not make sense because they're charging a significant portion of the margin that the actual vendor is charging. So whether you're delivering vegetables or fruits or small packages, you're actually eating into that margin because the cost of that is high. So one of them has to crack, and because it's easier to tell the delivery person we're only going to give you 20 rupees instead of 40 rupees, and they still need the business because they have the people, that sector is getting hurt and hurt badly. I'm talking about the real logistics where you're trying to move. There's a shortage of cars. Most people don't have, the showrooms are empty, so those cars have to be transported. The parts of the cars have to be transported around the country. So the big ones that you mentioned, like Gati and Transport Corp and All Cargo, they're the other players who sort of will benefit from that. Again, it's a lag. And again, we are going through some kind of consolidation. But if you've seen what happened in Diwali, there's no white goods. People are buying white goods like crazy. People are buying cars like crazy. So, that stuff has to get sorted. And there has been definitely some, optimization of resources for all these companies. And so you're seeing it in the prices that they'll continue to do well.
All right, Mr. Advani, we spoke about delivery in the last minute or so. We briefly touched upon Zomato as well. The new age themes, November 2021, everyone was talking about them. And I think that's when the market started getting overheated. Now, November 2022, they're again in focus because a lot of the lock-ins are expiring. And some part of the street is getting nervous, about the supply. Will you be interested in any of these businesses? Some of them, they had huge subscription, huge demand. They went up, case in point being a Nykaa, and it's back to around 1,100. Yeah. Would you be interested at this price?
So I would call them the big four, which is Nykaa, Zomato, Policy Bazaar, and Paytm. That all the IPOs came together, and they, as you said, all the lock-ins are expiring now. There is obviously pressure on these companies because the players who have been the lock-in players, again, most of that money was foreign-driven. Okay, it was the Tiger Global buying the pipes to make sure that the issue goes through. So, are these good business models? I perceive in the order that I would buy them, I would say Paytm, Nykaa, Zomato, and Policy Bazaar. Of those four, I mean, just to take new age businesses. Paytm, the only minus is that it's got Chinese ownership, so our Indian government is not happy with that. but it has all the back end in place because both Tencent and Alibaba have it, and they are owners behind the scenes. Food delivery is here to stay, but now people are saving money, and there's a bit of a belt tightening, so people are going out and bringing it. So there's a little bit less coming to them. But and also they've had some issues with trying to steal the clients and get their own kitchens to be able to deliver the food. So that's not been doing well. Nykaa, there are now other competitors coming into the space. Reliance is coming into the space, and the Modi Care has been in the space with a slightly lower end product. So they're fulfilling a niche that is going to see pressure. And Policy Bazaar, there are lots of fintechs and lots of insurance people in the space, whereas Policy Bazaar was the first, and the insurance space is not sticky, so people can pull people. So those are that's my thought. But yes, they all have sustainable business models. They all have competing with the unorganized sector, and as the government enforces GST better, they will thrive. But it's probably going to take a year or two before these things settle.
Take your point, Mr. Advani, and rather bold of you to have Paytm as the top of the Big Four list, given the price performance suggests otherwise. In the Big Four, the Paytm stock has actually been the most, loss-making for investors. In fact, listed below the issue price, and from there itself, it's fallen about 70% as against others which are doing better. In fact, talking about the new companies itself, just pull up the intraday chart of Nykaa. It's taken off like a rocket, almost up 18% as we speak. So there's something which really is going on out there. We need to try and figure out what's taking place in Nykaa, up 18% as we speak. Of course, it's been an underperformer, so let's see what happens. Maybe, some of those shorts are coming in for auction under the SLB, etc., or not. We'll perhaps have to monitor that. It's a cash stock, so we'll monitor Nykaa as we move along. And also, before we slip into a short break, just keep an eye out on the intraday chart of United Spirits. A big move is what we're seeing out there. It's still Monday, but remember last week was a truncated week, and we're moving towards the Christmas stretch of this year, the third quarter. Let's see how that comes about. Third quarter of the financial year, of course, we will monitor as consumption and the situation in the spirits place takes place up at the high point of trade. Let's take a short break. On the other side, we'll, as always, get you buy today, sell tomorrow ideas coming in from our technical experts.
Sensex Systems Limited, among the leading Indian manufacturers of electronic subsystems and cable harnesses in the defense and aerospace sector, now makes an initial public offering of equity shares. The 100% book-build offer being offered in a price band of 197 to 207 rupees per equity share. Opens October 31st and closes November 2nd, 2022. For risk factors and other details, refer to the red herring prospectus.
Do we have to wait years for a cure?
Hey, Mommy, can we go make some pancakes?
Yeah, let's go. Or are we smarter than that?
I've heard when economic activities increase, the demand for commodities also increases.
Correct.
That's why I want to invest. But I can't decide which commodity to invest in.
Simple. The way this one ice cream has many flavors. In the same way, when you invest in a commodity index futures contract, you can get exposure to multiple commodities together, and the risk will be lesser.
Oh wow, multiple targets with one shot.
Well, sustaining above that 18,017 mark for the Nifty, a lot of stocks doing extremely well. We do have, the markets spiking as we speak. Eicher Motors from the frontline space has actually moved to the high point of trade. Giving it company is Asian Paints, which is doing extremely well as well. Let's get Mitesh Thakkar back. He'll tell you what to buy or sell today for a reverse trade tomorrow. Mitesh, holding above that 18,000 mark, we were worried about where the 3 p.m. move goes. This time it's gone up after consolidating for most part of today's trading session, holding the gap up that we had. Where do you think it goes from here? It's getting closer towards your resistance zone of 18,050. What would your trade be?
So one, I think, on the Nifty, once it crosses 18,050, I think, we'll add on to long positions. But that apart, I think stock side, we are clearly trading with long bias, and one of the stocks was just covered here. I think that's McDowell's or United Spirits. Very good breakout taking place over here. Buy here with a stop below 880 or just maybe 879, and a target of 935, 940 can be seen. The other one is a buy on Marico, which is also moved up. That's a buy with a stop below levels of 518 for targets of 535.
Okay, got that. Thanks for that, Mitesh. Well, good going actually is what you're seeing on the index today. The Nifty bank, keep in mind, is still up only 0.7%, but IT has made a comeback and made a comeback in style. IT is up closer around 1.5% odd. And as I mentioned at the start of the show, the tide may not lift all boats. Case in point being a Bandhan Bank that is now down close to 10%. Intellect Design, that stock is down close to around 15% odd. While you have, most of the other names in the same space that are doing pretty well. Mindtree is flying away. That's up close to around 4% as we speak. So select mid-cap IT names are doing well even in this market. Well, L&T, that's the other big boy that will be reporting its numbers today. Vivek joins us to run us through the key expectations out there. Vivek.
That's right. So L&T, markets are pricing in a good quarter. Revenues are seen higher by around 10%. Strong order inflow and execution seen for the company this time around. EBITDA is seen almost higher by 9%. Now remember, the company will benefit from the fact that, easing off of commodity prices, especially steel prices, something that will aid the company as far as its margins are concerned. Significant proportion of its order book is a cost pass-through, but despite that, given the fact that it is unable to pass through most of the cost, company did face a significant margin dent as far as rising commodity prices are concerned. So any commentary on that is something markets will be very keenly anticipating. When you're talking about the margins are seen steady on a year-on-year basis. Profitability is seen higher by almost 20%. What is it that the markets will be watching out for? The order backlog, and also what is the kind of execution trend that is being witnessed as far as L&T is concerned. Company has already declared orders worth 14,200 crore for the second quarter, with a few more order wins coming in as well. So now, what is it that analysts are expecting? Expecting a strong quarter. Mainly ENC-led profit growth is something that we need to watch out for. The other thing that is important to note as far as L&T is concerned is the valuation. Remember, most of L&T's IT subsidiaries have seen a significant derating as far as the valuation is concerned, but the core business valuations have gone up significantly. So a good and an important quarter as far as the valuation too is concerned as far as L&T is concerned.
Okay, all right. Thanks a lot for that, Vivek. By the way, Nykaa now locked in upper circuit, up close to around 20% as we speak. Well, it's a big move. It was Astis doing well, and in the last hour of trade, from the time we started off the show, it's done another 9 to around 10% odd. So clear up move being seen on that one. A few other names in the paper stocks. Orient Paper, the rank underperformer actually in this year so far. Till September, the stock in fact was flattish, while most of its peers had doubled. From September onwards, I think this one has outperformed actually. If we put a year-to-date chart of Orient Paper and maybe JK Paper, you'll see that JK Paper has given you big returns. Now in the last 3 months, Orient Paper has played catch-up. So maybe if we get, both those two charts in, a year-to-date of both those two, that'll tell you a bit of a story out there. Hemang Jani of Motilal Oswal Financial joins in. Hi, Hemang. Thanks so much for joining in. Any view on the paper space? We have a couple of smaller names, SSI Paper, that came out with their numbers. Very tricky industry, really, to play because things can turn at any point of time. But your view?
So good afternoon, Nigel. I think we've seen a good quarter for some of the companies, and the pulp and the finished paper prices globally have remained quite firm. So the integrated players, somebody like JK Paper would definitely have some benefit as there is a possibility that the pricing trend even in the domestic market could remain good. So I think there could be some tactical play for some of the paper names, particularly JK Paper, even from current price point.
Right. We'll just, take note of a couple of stocks, take a break, come back and, have a conversation, continue our conversation with you, Hemang. But At the start of the show, Nigel, we spoke about a couple of these urban, consumption stocks which are doing well, right? The case in point, Trent and Aditya Birla Fashion. Add a couple of others to that as well. Metro Brands has now moved to the high point of trade, so that's the stock that's doing well. VIP, which opened well, has now only extended gains. So VIP Industries again has moved to the high point of trade. And Westlife Development, that's the other one that I'm tracking. From the lows of today's trading session, it's recovered almost 5% and most of the gains have come by in just the last 30 minutes or so, currently at the high point. So urban discretionary doing well. We'll take a short break, come back, continue our discussion with Hemang Jani and count down to the market close.
Well, Jubilant FoodWorks could move out there. You know, that stock has moved up and it's moved up in style. So just keep an eye out on that one. And Eicher Motors as well. You know, these are stocks that have suddenly moved higher, particularly in the last 20 minutes or so. So just wanted to highlight that. But Mangalam, for me, the star of today is HDFC Bank because that's made a comeback and that's made a comeback in style. Let's see whether or not, at the end of today, we see a larger FI number that comes in there. Because remember, these stocks corrected because of the large FI holding. And today, this is contributing big time both to the Nifty's move as well as the Nifty Bank's move. So that's clearly the star of trade, actually. Plenty of stocks moving around, but HDFC Bank, they are the stars of today's trading session. Well, on that note, it's a good time to get in some market opinion that we got earlier today. We caught up with Christopher Wood of Jefferies to understand his take on the global markets, and he believes that there is a possibility of a year-end rally in the US. He also spoke about resistance in the Indian markets despite foreign outflows and tighter policy. Let's hear him out.
There is a possibility of a rally into year-end, partly because the next CPI data point, which should come out just after the midterm elections, has a better base effect. First point. Second point, if the midterm congressional elections go in a way which the market perceives to be positive, I think both those events can trigger a bit of a rally into year-end. Global emerging market investors have to invest in China because it's a major part of the benchmark. But what you will increasingly see, and this process has already begun, you will increasingly see growing interest in global emerging market mandates excluding China. On India, what's been amazing about India this year as a stock market is its phenomenal resilience in the face of a very weak Wall Street, in the face of record foreign selling of Indian equities in the first 6 months of the year, and in the face of a quite significant monetary tightening cycle by the Reserve Bank of India. I think the Indian stock market can go materially higher in the next 5 years, assuming we remain in a residential property market upturn, and we get a CapEx cycle following it. I remain very bullish on oil. I think oil goes materially higher. My favorite sector in global equities is energy. So in a global portfolio, I want to have weightings to India for obvious reasons, but I also want to hedge that with energy exposure, because clearly energy is a vulnerability for India. Though I think India is less vulnerable to rising oil prices than 10 years ago.
Well, that was some words of wisdom coming in from Chris Wood. Just keep an eye out on a bunch of stocks. Nigel, you spoke about Jubilant FoodWorks and all the consumer discretionary names which are doing well. Well, Barbecue Nation has perhaps, taken note of that and gotten excited in trade today as well. Barbecue Nation has moved higher. We were talking about Metro Brands. Look at Campus Activewear. That is the other one which has moved to the high point of trade as well. So these consumer discretionary names which are doing extremely well. Hemang is still with us. Hemang, your thoughts on these stocks? They're making a bit of a comeback in today's trading session. And if you can extend that, after a lot of consolidation, even Indian Hotels has come in for some buying today. It's at the high point of trade. Which among these consumer discretionary names do you like, if at all?
So Mangalam, I think discretionary consumption has been a big theme. And as we all know, as we have moved into the festive season, the kind of spend people are doing across the jewelry or this QSR space, or if you extend it to some of the categories like footwear, it's been mind-blowing. And we think that this is likely to continue as you move into the next festive season, basically Christmas, and globally also I think the markets are quite supportive. So we think that names like footwear, where we had this initiating coverage reports on Metro brand as well as Campus, we continue to have a positive outlook over there. I think Jubilant Food was a relative underperformer, but I think there is a lot of catch up to do once we have a little bit more clarity in terms of numbers. And even names like Indian Hotels, we think that is extremely well poised as you see the occupancy rates moving to 85-90% with the tariffs rates moving up. So I think this theme will really do very well over the next, let's say, about 6 to 12 months.
Okay, all right. Hemang, always good hearing your thoughts. Thanks so much for joining in. Wishing you a good Monday evening and a rocking week ahead as well. We'll touch base with you rather soon. Well, let's wind down then the markets. Final minute of trade left. It's been a good session. The Nifty's broken the jinx. We have ended at the high point of the day, conquered 18,000 mark on a closing basis, which is pretty good. Domestic-facing themes did well. Whether it was autos, whether it was cement, you had Ultratech Cement and Eicher Motors, both of them were the top gainers on the Nifty. Mahindra and Mahindra as well chipped in with solid gains, but the day belonged to the HDFC twins. They came back in style today. And both of them, after being underperformers in this year, well, both of them have bounced back in style. Remember, in comparison to the headline index and other stocks, they've really not done too much. But today, they did bounce back. A couple of losers, Apollo Hospitals, well, that was a lone loser on the Nifty itself. From the broader markets, well, you had good gains. The mid-cap index started off a little bit slower, but it caught up as the session went by. You had the IT index that was a star, was up 1.5%. The Nifty Bank as well, that index in fact was a little bit of a slow starter, but ended with a gain of around 0.8%. And just two stocks on the broader markets that reacted to their numbers. One was Intellector Design, stock ended down with a cut of more than 10%, and the other one was Bandhan Bank. In a strong session, both those two reacted negatively to their numbers. And Mangalam, plenty of action, right, in the broader markets?
Plenty of action in the broader markets, Nigel. Mid-cap index, towards the second half actually became the star of today's trading session. And in that, the stock that stood out on the way up was Nykaa, ended with a 20% upper circuit after seeing a serious amount of drubbing in all of last week and this month as well. So as we speak now, it's trimmed its losses for this month to just about 7% Then we had a bunch of other stocks do actually, quite well. We did see some gains come by for a lot of these cement names in the mid-cap end of things. JK Cement did well. Dalmia Bharat was among the top gainers. And Trent as well as Indian Hotels also put in some gains along with a couple of these consumption discretionary names, Indian Hotels and United Spirits. From the broader markets, the stocks that did not do too well, apart from the names that Nigel mentioned, we had Satin Credit Care down almost 10%. We did see some cuts in names, which belong to the financial space. We had Shriram Transport, LIC Housing, Petronet LNG, all of them sitting with cuts of anywhere between 2 to 3%. But, we had more gainers than losers, and the quantum of gains were much higher than the quantum of losses, barring a couple of them which declined on account of results. So all in all, a good trading session for the frontline index, and even better trading session for the mid-cap end of things.
Well, before we wind down, on Closing Bell, we have a producer of our show, Smita. It's, effectively her last, time that she's rolling the show. So she's the one behind the scenes who supports us all through the show. And Smita, from the team of Closing Bell, we'd like to thank you for, supporting us for the last couple of years and putting the show together. Well, on that note, though, we'll have to wrap up on this edition of Closing Bell. You don't go anywhere. Our Monday special, Money, 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 comes up next.
Powered by LIC, हर